What's up, degenerates, hedge fund lurkers, and anyone that's allergic to an index fund, which is the majority of you? Let's listen the fuck up because the market's getting weirder than a Tesla or Palantir earnings call. And the option whales are back at it like a crack addict, baby. And today we're going to go ahead and spread this market wide open like some butt cheeks and get straight into it. We're going to dive into our 18th through the 23rd flow data. And I'm telling you, there's something a brewing, and it's not witches. If you miss it, you're going to be the guy holding calls in a market crash wondering what the fuck happened. Let's go ahead and just break all this down for you. So to kick things off, the S&P 500 held onto gains, and the NASDAQ got smoked like your favorite opposition. Anyways, the S&P 500 saw a 0.5% gain on the week. The NASDAQ only a 0.2% gain. It barely limped higher after getting dragged down by big tech. And Trump's tariff threats are hanging over the markets like a sword. The Fed paused as expected, but the message is mixed. It's mixed out there, folks. Inflation forecasts ticked up, and Powell said the quiet part out loud. Tariffs could juice inflation. And we don't know if it's transitory. And no, I'm not talking about transformers or trans people. This ain't your grandpa's rate pause, I'll tell you that much. Or it's not the rate pause from before. This is a policy confusion at its highest level. It's like the NBA of policy confusion. We are in the big leagues of being fucking confused, which is great because it's like the people who are in charge of all this shit are the ones that are confused. So what do we have to be worried about? What do we gotta be worried about? I don't know. Anyways, the street is sitting in cash and they're just waiting for someone to blink, wink, or fart so they can fucking make a move, baby. Anyways, let's go ahead and talk about the real market. And no, I'm not talking about the black market. I'm talking about Investor Central Club, baby, where we get all of our options data from because they're just the best at it. Like, they're the best data screener that I use in terms of finding quick, actionable insights that I can digest really quickly, you know, like a fat girl at a buffet. So let's go ahead and dive into what the hell was going on here, because we had some moves, and not like Jagger and Mick Jagger. First things first, with SPY, we had $170 million in flow last week. We had 29 million in calls against 141 million in puts. Yes, you heard that right, ladies and gentlemen, 141 million in puts. And what's crazy is one of the most common contracts were the 560 puts that are expiring for the 17th of April. Next up, we had 16 hits on that same put, by the way. So just to give you perspective. The street is hedging hard, likely into Friday's PCE data, and the volume is up, and IV crept above 25% here. NVIDIA, we had 104 million in flow with 58 million in calls against 46 million in puts. Again, NVIDIA's that casino ticker at this point. We're always going to see like a 50-50, 55-45, 60-40 split. The GTC event was a disappointment. Blackwell Chips got a yawn, not a bid, really, because I don't know what, I feel like GTC just gets more and more complex every year to where, like, unless you religiously follow and are obsessed with computers, you have no idea what the fuck Jensen's talking about 75% of the time. By the way, my mustache is looking fucking amazing today, so let's give it up for that. NVIDIA, however, is underperforming hard and broke 3 support zones in just 3 weeks. The highest single strike were the $120 calls. Let's go ahead and take a look at these bad boys. We have 120. Okay, I guess it's not going to show it. Cool. well, that's awkward. Oh, wait, hold on. It's because it's big money. It's going to be the $120 calls expiring on the 17th of April. And it looks like it could be a scalp for short-term upside, but there's a little bit more for long-term worry to be said. Tesla, we had $96 million in flow, with about $52 million going into calls against $44 million into puts. RBC slashed its targets on Tesla, and China's BYD hit them with EV range tech news that turned heads. They also released a new car over the weekend that we broke the story on Twitter about, that's supposed to compete with like Mercedes and shit. So, and it's only 60 grand. I don't know. They might be over there cooking up more than just child labor. All right. Anyways, moving on, we had PDD with 74 million in total flow. 31 million came in calls, but 43 million came into puts. And our most common contract over on this side for them were the $120 puts expiring on, holy shit, January 16th of 2026. The China risk premium is back. That's all it's really telling us. Sweep activity hit at the $100 to $105 put range, which is signaling a expectation of a fat elephantitis size leg down. Moving on, we had MU as another notable. No, actually, fuck that. We had IWM, 62.24 million in flow with 18 million in calls against $43 million in puts. It looks like printing tendies isn't the only person who thinks IWM is just full of dog shit that you shouldn't buy, because institutions are also hedging against this heavy with 10 hits on the $194 strikes that are expiring for the 17th of next month. So yeah, be on the lookout for that as well. We also have QQQ up in our flow for the day, 59 million in total flow last week, with 25 million in calls against 34 million in puts. It looks like people are split here too, like a butt crack, with the $470 strike being our most common contract with 4 hits for that March 28th expiration date. So be on the lookout for that next week as well. Now in dark pool world, dark pool land, ladies and gentlemen, let's go ahead and take a look at our dark pools, okay? It's gonna be awesome. We had, if I could get this to filter right. So it looks like over in dark pool land, we had over $10 billion in dark pool prints just in SPY and IVV alone. And there is a kicker here. There is a kicker. SPY had several prints over $950 million. I promise you folks, that's not rebalancing. That's fucking positioning. That's like getting them bent over and getting ready to give it the business. You know what I mean? Date lines up with Powell's press conference. Smart money doesn't wait. They strike when it's quiet. And Form T and QCT tags are everywhere, and institutions are front-running retail again. Also worth noting here, MU and NVDA both saw elevated equity block prints same time. Coincidence? I fucking doubt it, you idiots. No, I'm just kidding. You're not idiots. I love you all, and I love that you guys love to watch these videos, and I get to entertain you for like 10 minutes a day, and I just have your attention. I got you by the balls. Anyways, let's go ahead and talk about what's coming up this week, though. We have PCE week. It's the Fed's preferred inflation gauge. We are forecasting core PCE to come in at 2.7%, which is up from the 2.6% prior. Uh-oh. If this comes in hot, say goodbye, bye-bye to the June rate cuts. And combine that with tariff fears and lack of earnings upside, boom. That's your fucking catalyst for more downside. Spread them butt cheeks open and get to pounding, baby. Anyways, April 2nd, market. That's Trump's so-called Liberation Day. Whatever the fuck that means, by the way. No one knows if it's a meme or a policy drop. If new tariffs are announced, tech will take a bat to the knees like some poor schmuck owing the mob some money, all right? Because they'll break your kneecaps. Anyways, retail. Let's go ahead and just go over our high points. Retail's still bullish, but the pros are hedging. Here's the playbook. SPY, hedge with puts, or go neutral till Friday's PCE. NVDA, any bounce looks shortable unless it reclaims $125 fast. Tesla, downside, still has room. Look for $210 to $200 levels. And UCalls, spec bet, but not for widows and orphans. And watch for another SPY dark pool wave, especially over at 950 million on a single print. So if you're waiting for CNBC to tell you what's next, you're already late. The options flow is the real forward guidance. Big money's hedging, dark pools are snapping up shares in silence, and the Fed's got 1 foot on the brink and 1 foot on the gas. Stay ready or get wrecked. And don't forget, Friday's PCE report could be the match that lights the fuse. Be smart, be fast, be skeptical, and don't be a fucking dumbass. Anyways, thank you for watching this week's Weekly Outlook Report. I'm your host, Max Pitts. I will see you guys in the next episode. I missed you all. I was fucking sick for 2 days, so I wasn't able to do this. I'm still a little bit sick. That's why my eyes are so slanty. Anyways, see you guys in the next one. We will be doing daily market recaps. I'm going to get on live stream here in a little bit. See y'all in the next one. Love y'all. Mwah. Peace. Have a good one. Happy Sunday, motherfuckers.